Alright, going into the afternoon session, price did extend a little bit higher, coming closer to a test of that high that was made at the beginning of the week during the after-hours session. But still looking so far like a three-wave structure off of the low that was made yesterday afternoon. So that keeps the door open to the same two potentials that we were discussing during the noon video. With only three waves up so far, it is possible that this is the B wave within a wider flat wave 2, that's shown in the chart in red, or completing wave 3 of a possible leading diagonal off of yesterday's low, needing a fourth and fifth. Technically, you could make a case that it will fill out as an impulse and just completing wave 3 of 3. The only issue I have with that interpretation is this portion of the structure looks like a three-wave move, which fits fine as an A wave within what will be wave 3 of the LD, but a little bit harder to make a case for the standard impulse off of yesterday's low. Either way, you would need another 4-5 at a minimum to get 5 waves up from yesterday's low to suggest we've already completed the wave 2. Either way you slice it, though, it still looks bullish overall off of last week's low, regardless of whether we've completed the wave 2 or we get that wider flat shown in red. Next up on the gold chart, a little bit of a bounce during the afternoon session. As mentioned during the noon video, if price did happen to turn up from today's low and exceed the high that was made yesterday, you could technically count that as 5 waves up from last week's low, the low that was made at the end of last week, for a leading diagonal structure, but I would still be considering the possibility that is just a higher B wave within our wider flat wave 4. The wider flat wave 4 still very much a reasonable possible outcome from here, and back below today's low and very likely working on the C wave of that wider flat to take price back to at least 1875. Overall, though, unless we happen to get overlapped in the price structure, again, a break back below this B wave high that was made at 1854, going to maintain that standard impulse count going back to the March low of last year for the primary fifth wave. On to the silver chart, which is also bouncing during the afternoon session, still below the high that was made yesterday. If price exceeded that high, it has the potential to also exceed the high that was made last week. At that point, we could see a potential extension up to the 1236 fib. We discussed that as the next target, which was at 2621. But in comparison to the gold chart and even the GDX chart, the subwave structure here again is much messier, less reliable, and still just 3 waves up so far from the December low. So we need to see a little bit better evidence of either a diagonal structure. It really does seem limited to a diagonal structure. Whether that be the entire fifth wave taking shape as an ending diagonal or maybe a leading diagonal off the December low filling out. And GDX recovering a bit going into the close as well, back near the high that was made yesterday. Similar to gold, even if we exceed yesterday's high, that could just be a slight extension of the B wave within that expanded flat wave 4 potential. But also like gold's, I would at that point also consider that all of wave 4 completed at the low that was made at the end of last week, and price is filling out the fifth to give us that 5 waves up from the January low. Especially the gold and the GDX charts, both still cooperating with our large degree bullish expectations, so there's nothing really to be too concerned about aside from the C wave down in a wider flat on these charts at the moment. Next up on the crude chart, rallied back to the overnight high going into the close. So it held that 382 retrace we discussed during the noon video for wave 4 or 5, and trying to now fill out the wave 5 of 5, which can take it up to, I would say right around 115 probably would be the next expected target if we exceed the high that was made during the overnight session. At that point, we will have a 5-wave structure off the low that was made last week, and the potential for price to attempt to top in both the 5th wave from last week's low and the large degree 5th wave from the December low. Dollar curled back down during the afternoon session, but as we were talking about during the noon video, if price can hold support between this 382 and 618 retrace 97.33 and 97.02, then it can count as wave B of 5 and attempt another push up to the 1618 fib at 98.09 in the wave C of 5 before the blue fifth wave here completes. So it would require a break below 97 as the initial warning sign that maybe we've already completed that upside, and then a break below the lows from last week for some confirmation. All right, moving on to the request, starting with Sblk. This is another chart that we were hoping to get a more proper-sized wave 2 consolidation, which it did come pretty close to a 382 retrace, and is a nice 3-wave corrective flat structure, so it did reach low enough, I think, to satisfy a possible wave 2 trying to turn up now in the start to a wave 3. That does, if still a 1-2, suggest that we could be getting an extended fifth wave. But because of the size of that move, there's a case to also be made that price can be further along in that fifth wave rather than still just the initial wave 1. So we'll have to kind of, play it by ear as price fills out the subwave structure. But right now, no reason to assume that further upside can't be seen in either interpretation. Next up on DraftKings, it is a 3-wave structure so far from last week's low, so I want to see that develop into 5 waves up if we have a bottom of sorts in place. At a minimum, getting a higher high on the week. If this was wave 3, this was wave 4, and a higher high would be the 5th of a possible leading diagonal up. Next up on Roku, we also have only 3 waves up from the February low in this case, so need to see better confirmation that a bottom has been struck, and also is still technically in a downtrend, lower highs and lower lows since the top that was made near the end of last year. So need to see 5 up, need to see some higher highs, higher lows, in order to get better evidence that a bottom has been struck here. Coffee chart starting to roll over, potentially reattempting a top in the wave 3 and that wave 4 pullback that we've been anticipating for some time, but need to start breaking below some of the prior lows, starting with 222 as initial evidence of that top struck. On to Palladium futures, still seems to be searching for a local top in that wave C of A. It's definitely reached high enough, subwave structure can support a top being attempted soon as well, but just hasn't provided enough downside price action from a high to assume confidently that the B wave has started. And I should mention, technically possible that this parenthesis A wave takes shape as a 5-wave move, so the next high just completes a 3rd, and you get a slightly shallower consolidation as a 4th, and then a higher high as a 5th. Next up on wheat futures, spike higher here seems to be an extension of the wave 3. Not something that I would jump in front of regarding a short position, but it's not a situation where trying to otherwise jump in on the long side seems to offer good risk reward at current levels, and seems to be also a angle of ascent that is unsustainable. Next up on the Visa chart, definitely want to see the low that was made last week hold, and as long as price is holding that low, I think we have a potential 1-2 start to what counts best is now an ending diagonal C wave off of the December low, and that is one of the options that we had discussed previously when price was coming into a measured move fib target rather than cooperating in typical fashion that we would expect a standard impulse to fill out as. So I had mentioned that at the time this could be an ABC up as what will turn into wave 1 of an ending diagonal C wave. We did get the pullback in wave 2 from there, and want to see again last week's low hold. If we happen to see a marginally lower low down to that 786 retrace at 199, then reverse back up from there. It would still maintain that 1-2 is valid, so it depends how much room you want to give the setup with a stop. If you want the tightest stop, it's below last week's low. If you want to give it a little bit more room, below the January or December lows. Next up on EOG, it is extending up to that 1618 fib at 121. No evidence that a top has been struck yet. It continues for me to be a situation where trailing a stop or otherwise hedging the position by selling some covered calls or just slowly trimming profits from the position is the way that I would be approaching this currently, and not a situation where I can confidently recommend any new entries with the expectation of a substantial amount of further extension higher from here. Let's see, the request for SLV is going to be the same as the analysis that we discussed on the XAG chart. Same underlying, just different instruments to trade silver with, and again, between gold, silver, and GDX, silver is just kind of the most ambiguous at the moment. So, better trade setups, better opportunities on gold and GDX at the moment. Moving on to MRK, still can attempt that wider flat B wave, but should be doing so from here, from last week's low, I should say, if we are going to see that fall through. The alternative, if that breaks, would otherwise be that all of the B wave has completed. And again, not a chart that I see clearly setting up a new high from here above the high that was struck last year. Sblk we looked at. Next up on the Tesla chart, it really reached past what I wanted to see for any reliable wave 4. It does still reasonably count, though, as an A, B, C correction to the downside off of the November high. Not quite a clear 5 waves up from the low yet. Let's take a closer examination of the subwave structure. If it will load. With a higher high here above the high that was made on the week so far, you could squeeze 5 waves in. I would say even better with another 4 or 5 from there to get a possible 5 up. Moving on to FINX. Let's see, was that a higher high? Looks like it was double top. Into this high back at the beginning of last year. Looks like 5 up from the 2020 low complete. You could make a case that this is an A, B, C down since that high, completing, setting up at least more of a near-term corrective bounce, but a chart that's not clearly setting up a trip back above last year's highs, in my opinion. Moving on to MP, still the potential that we get one more drop lower as a micro 5th wave to complete this wave C of 2, but otherwise still looks good within the bullish potential in blue as the 1-2 off of the February low. Next up on CPRI, the potential 1-2 here remains valid as long as price is holding above the January low. The current consolidation since the February high could be wave B of 3. It does technically still have an opportunity to spend a little bit longer in that consolidation if it wants to. This could be an A wave down, B wave bounce, and get a wider flat. But it did hit a 382 retrace, so any breakout above the February high suggests that the wave C of 3 is underway. Onto CPNG. I like the potential ABC to the downside off of last year's high that can count complete into the January low. And although it's not necessarily a textbook-looking impulse, not unreasonable, I think, to get 5 waves up from the January low. This would be the 3, 4, and 5th. So if it is 5 waves up, then ideally we have more near-term consolidation in a wave 2. I believe it's reporting after the close today. Posted a chart in stock waves earlier, so that could be a catalyst to get that pullback in either the wave 2 or B wave if we do see it. From here, then $22.50 down to $20 is the target support that should hold, and provides an opportunity within that range to attempt a long position using a stop underneath the January low. Next up on GRBK, let's see, we technically did hold a higher low by maybe a few pennies here compared to the October low, so that does maintain the 1-2 in blue as valid, but I think it's probably a little bit better counted as the red 3-4 because of that basically full 100% retrace. Off of that low, impulsive looking subwave structure so far, maybe wants one more marginally higher high here to complete 5 waves up. After that 5 up completes, ideally gets a near-term consolidation back to the 23 to maybe 21.50 range, and you could use that as an opportunity to attempt a long with a stop underneath the February low. BHF, another situation where we got pretty much a full 100% retrace as what would be this wave B of 3, so although it didn't technically invalidate, probably better counted as a wider flat for the wave 2. Or could even move the wave 1 high over here, count this as a leading diagonal up, and even open the door to a standard impulse to the C wave to the upside. The subwave structure off of the low here, though, is only a micro 3 wave so far. Let's put some fibs onto it. Since we've only hit a 1, 2, 3, 6 fib so far, a little bit more difficult to call this a 3-4 and another high as 5 waves up. We could see another high as just an extension of a third, get another 4-5 from there. That would be a little bit more satisfying 5 wave structure to the upside. It's going to get pushed out in timing a little bit further here. On to JWN. It ended up making a marginally lower low in February compared to the December low, so that did invalidate that micro 1-2 potential from that low. It does make the subwave structure in the C wave down from the November high a little bit messier than ideal. Looked better trying to turn it from the December low. But you could still make a case that there's some bullish potential here as long as the recent February low holds. Another chart that doesn't quite have a clear micro 5 up just yet. This can be a 1, 2, 3, so another 4, 5 would provide that 5 up. Moving on to MO, we just didn't really get the most satisfying consolidation here for the blue B wave or red wave 2. I mean, technically you can squeeze it in at this high and low here, trying to break out in the wave C of 5. But because we didn't get that that ideal or satisfying consolidation, I could otherwise view this as an extension to the A wave to still reattempt a B wave pullback, especially if this attempt at breaking out above last year's high fails. Could still attempt more consolidation as B wave. Overall, though, the expectation for further upside in either a fifth wave or the red C wave can be maintained. Moving on to Brkb. It did come deeper than ideal for the wave 2, but did hold a higher low compared to the January low. So, valid count whether you want to count it as a running flat B wave or still the blue 1-2. It continues to look bullish overall, holding above that February low. And I believe I have this as an ending diagonal, if I'm not mistaken. Yes, so under the assumption of an ED, price can be completing the A wave, though. Get a near-term consolidation as the B. Within the red count, that could be a 1-2 start, reattempted start to the C wave. So right around 315.50 to 309.30 would be the support for consolidation as a B wave, or wave 2. Moving on to GD, nice breakout in the wave 3 here. Considering that the subwave structure for the wave 1 does count best as a 3-wave move, that suggests the C wave is taking shape as an ending diagonal structure. Let me go ahead and move this over to the micro chart. Missing some data there as well. So we're at a 1236 fib. It does look like price may want to try for 1 fib higher, the 1382, but at that point can view the high probability portion of that wave 3 filled out, and then set up a 4th wave consolidation from there, taking it back to about 221.50 before the wave 5 of C, up to 252. On to Fox A, it continues to look good as the 5th wave within this diagonal structure filling out off of the December low. Fairly convincing leading diagonal up for the A wave within that 5th. Then the question being, did we already complete a B wave, which reached low enough to at least consider, or do we get a wider flat? I personally lean a little bit more towards the wider flat structure, especially with only 3 waves up from this low so far, but if it happened to continue to fill out as 5 waves up, then we could assume that the C wave has started. That 5 up would be wave 1 of C. Moving on to SDIG, not a ton of history here. Also could look a little bit cleaner as an ABC structure to the downside, but at least that does appear to be a slightly better fit than 5 waves down. But more important is a potential 5 waves up from the January low. If that is 5 up, we should be getting a near-term consolidation as either a wave 2 or a B wave, assuming that 5th is topped, 1110 to 944 as the target support, that you can use as an opportunity to attempt a long position using a stop below the January low. And that should be either a 1-2 or an AB of a corrective bounce. Moving on to the RTY, we have a very similar subwave structure to the ES chart, in this case off of last week's low. Looks like 5 up into the high at the beginning of the week, and enough downside into a 382 retrace to technically consider a wave 2 pullback complete, but the same option of just the A wave of wider flat, B wave bounce, we get a C wave back down near that 382, or potentially maybe past that to the 50%. Before that consolidation completes and price resumes to the upside. But for the time being, it looks bullish off of last week's low. We can give it that same benefit of the doubt of a bottom being attempted. Next up on Cmre, the subwave structure within that wave 4 could look a little bit cleaner as an ABC, but it basically came down to the expected target support for that wave 4, this 1382 fib. That is shy of a 382 retrace though, so there is still room for deeper in the wave 4, so I do have to add as an alternative that it fills out as a wider flat, especially because of the kind of questionable subwave structure for the 4th. It doesn't subdivide clearly into a 3-wave ABC. So what you want to see to prove it as more bullish as the start to the blue 5th is holding a 1-2. There is room to reach a little bit deeper in that wave 2, 1245, and then exceed the February high for some confirmation. Moving on to DKS. Leaning towards this being an extension of the A wave, maybe taking shape as a leading diagonal down, so that gives room for a bit higher of a B wave bounce, about 123.26 as resistance. Past that opens door to the red wave 5 of C. NBR compared to some other energy charts that look a little bit more convincing as price attempting to start the wave C of 3 within that diagonal structure off of the August low. In this case, based on the structure, based on the fibs, it still seems like this can very reasonably count as just the A wave and still maybe get that B wave consolidation. But, you know, for a position, if you're holding a position aiming for the higher targets in that entire third, and you're fine with holding through a potential B wave consolidation, there's no reason otherwise to be concerned that something much more bearish from here is about to play out, at least at the moment. Moving on to MTDR, so a good example of a chart that looks more convincing as the wave C of 3 attempting to start. If that is indeed the case, then the ideal target to reach for that wave C of 3 is that 100% fib up at 64. It's 3 waves up so far from the B wave low in February, so that keeps the door open to the possibility that the C wave does take shape as an ending diagonal, which means that this could be wave 1, consolidating wave 2, before filling out the rest of the C wave, though. Moving on to AMD, it's attempting to hold the 50% retrace and 200-day moving average as the potential 1-2 off of last week's low. Until we get a breakout above the high that was made at the beginning of the week, we'll have to also give it the opportunity to maybe fill out as a wider flat for the wave 2, take it down to the 618 retrace at 111.60, where yesterday's low was only an A wave within that wave 2. But bullish potential remains reasonably probable as long as the low last week is holding. Next up on the XLE chart, it's definitely starting to extend past reasonable expectations for a fifth wave, so that does support the diagonal interpretation that we've been following in other charts that, at the time, made a stronger argument for that diagonal structure, such as the XOP chart. So within the context of the diagonal count, price can still get another 4-5 in the C wave. We're approaching fibs that are pretty commonly seen for a wave 3 of C. That 1382 fib, the next fib target above at 75.50. It's another situation where, by all means, if you're in a position, continue to trail a stop, or consider at least a plan to hedge or sell covered calls, but from current levels regarding any sort of new long position, I just don't see the clearest risk reward to jump in right here. Moving on to Riot, we did hold a higher low in this case compared to the January low, but the move up from that January low looks like a three-wave structure. So maybe it's a 1-2 of what will turn into a leading diagonal, larger wave 1 of the fifth. It kind of needs to see more price action fill out to get better confirmation that it is trying to turn up in a fifth wave. Next up on AR, by breaking out above the high that was made last year, I think it provides better evidence that price is trying to fill out the wave 5 of 3 and the 1382 fib target there at 33.80 as the ideal target. Next up on Neo, did come down to the 382 retrace, just below 18, or probably bottomed at around 18. But still in a downtrend, still going to need to see some evidence that a bottom is being attempted and trying to turn up in this potential fifth wave. My concern on this chart is that the fourth wave has dragged out longer than ideal, just from a duration standpoint, not from a fib standpoint. 382 retrace is the most common target for wave 4, so it's fine within that respect. But we've seen a few charts, more than a few charts, that looked good as a possible fourth wave, convincing wave 3 into the highs early last year, and then failed to hold support for a fourth wave. So I've become a little bit more cautious with some of these charts that kind of match that same look to them. This, I think, is still reasonable to count as wave 4. We need better evidence of the start to the fifth, though. Moving on to HIMX. Not the strongest start yet to the potential wave 3 of 5 here, but does technically remain a valid count. Back below the January low, though, and next bullish option is a wider flat fourth. And then the same comments that I made on the Neo chart at that point. I mean, the fourth, duration-wise, starts to look a little bit disproportional. At least have to view it at a slightly lower probability at that point. Next up on MAG, it does look like a corrective consolidation off of the high that was made at the beginning of last year, but it needs to be counted as a WXY if we have completed a corrective pullback. Subwave structure, though, from the January low certainly has a more impulsive-looking shape to it than it does being clearly corrective, so I think there's reasonable odds that price is trying to start, whatever this is off of the January low. It could be a big 1-2, it could be an A, B, but the 5 up seems to be an initiation of an attempt at starting a new trend to the upside again. On to VGZ. This chart so far is only 3 waves up from the December low, so it needs to fill out another 4-5 to get a possible 5 up. AG, close to 5 waves up, just needs to exceed the February highs to get that 5 up. Gap, way too deep for this to be viewed as reliable for wave 4. So, looks like a more significant top was struck last year, and counts best as an ABC up into that high. Now we can be nearing completion of an ABC down from last year's high. This may be a larger A wave, but there's not a clear setup to head back above last year's high at this point. Moving on to Starbucks, came down to the 618 retrace. That is the lower end of support that we usually give a fourth wave within a diagonal structure. So if it is going to hold as that fourth, turn up in a fifth, this is the spot where price needs to attempt to do that. And it does, especially if it can continue to turn up from here, look pretty good still as a nice ABC 3-wave structure down from last year's high. Next up on TLT, confirming only a 3-wave bounce off of the recent low here. It did hit a 382 retrace. That is enough to satisfy the red B wave. Breakdown below the February low favors the wave CF5 filling out. Otherwise, wider flat could be attempted for the B wave, even with room up to the 50 or the 618 retrace. But I continue to view the red count as the more likely outcome at this point. Blue 1-2, although has not invalidated, needs to prove itself, and is being viewed currently as the lower likely outcome. On to Adobe, coming off of a fairly oversold condition that looks reasonable for an A-wave down complete, and certainly a more impulsive-looking shape to this bounce than clearly corrective. Now, we can see a bit more of a near-term consolidation if we topped in maybe a micro 5 up with room down to 455 to 439, 440. Assuming that support holds, can set up more near-term upside in the B-wave bounce. Okay, that should be all of the questions and requests. I hope that everybody has a wonderful evening, and I'll see you guys again tomorrow. Take care.